You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an EDGEFINDER alert on my Discord.
Wow, nice add-on.
I think my helmet's too tight, or maybe my head is just too big.
Oh, it looks like we've got an incoming transmission.
Remember guys, we're doing our big Black Friday sale this month. Check out the links in our bio for more information.
Roger that, Julie.
Okay, I'm starting to think we might be lost.
Maybe James could help us with directions.
I think he accidentally blasted himself out of the airlock.
Again?
Let's go get him. Man, I've been playing too much Starfield. This feels kind of real. I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now. That's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right, everybody, welcome back to another live stream. Taking a look at the markets and talking setups. Good to have you guys all with me here as we kick off another day. Slow start to the week, but we've got some stuff heating up as we get rolling into the end of the week. We've got Jerome Powell coming back tomorrow and on Thursday to discuss some key stuff here in terms of where the Fed is at and whether or not the Fed is officially going to be kind of in the wind in the sail for traders or for working against traders right now. So the past year or so, what I mean by that is that we've had monetary policy tightening, which has really been a headwind for people who are trading indices, for gold traders, in terms of basically being bearish for things like gold and stocks, etc. I've currently still got my S&P 500 trade here. We're looking at what has turned into about a $9,200 profit, but we are still stuck at resistance. So I'll show you this level. Again, we're looking at a 4-hour chart right now, guys, and I've held on to this trade since last week. We rode this up inside of the signals group, and I am still in this signal that I sent out last week. So in terms of my planning for this is I would really like to see, as we sit at resistance, can we in fact get a breakout through structure highs? We've struggled at this area so far to really make it or break it, right? We haven't really seen a sell-off, but we've also not seen bulls be able to get through this level. And in terms of how I'm playing this, how I'm trading this, I've got this move still on the account, obviously, and I will keep it unless price breaks structure. Okay. So how do I define structure? Well, I've got this nice little pivot low intraday that wicked off real strong for the bulls and got us up to this resistance point where we currently sit. The way I'm managing this trade is that if price comes down and takes me out of this trade, or if it takes out support here, that will be my trigger to go ahead and stop out of the trade and take profits. Okay, so I've got a trailing stop on this one. If we do break through the highs, guys, my goal will be to manage this trade by trailing a stop further into profit. Okay, so that's game plan for the S&P 500 for those of you guys who trade it. Let's take a look at the dollar index, which of course I've got to talk about this one. Let's start with the daily chart. Daily chart, really, really important pivotal spot right now. Because last week we saw a dollar index that was stuck into a range. And with everything that happened with NFP and the Fed meeting, we saw the dollar really fall under the lows and actually close decisively underneath. I think that this was a pretty bearish close to the last week's price action. As we speak, however, the dollar index is pulling back. We've seen the bulls come back in and are now testing this area. My opinion, and this is of course my opinion, we're stretched a little bit here and it looks a little bit concerning. I still think we have room to roll over, and I think sellers could come back in and take this as an opportunity. I think you're at a decision point for dollar traders. If you trade the US dollar, if you trade currency pairs, or if you trade gold, if the dollar is able to close decisively back inside of this range, it completely cancels out the idea that I had with the dollar. Right? Big momentum to the downside. We should see that continue. And if we don't see it continue, then my idea was wrong. Okay. So we have to understand as traders, it's really important to understand where you're right, where you're wrong, etc. So for me right now, you've got the dollar index coming back into this resistance. It should hold. And if it doesn't, that's an issue, right? Price action pulling back. You could actually get lower time frame. Take a look at the 4-hour chart, and we could identify this might be, I think it's getting like a 38.2% retracement. Let's see if that's right. Yeah, so we're right at that 38.2% retracement. And again, we should see sellers hold this area. If we don't, it's possible that this could have been a little bit of a fake out and we move back into what is consolidation. Okay. So how am I playing that? What does that mean, Nick? Well, I don't have any dollar specific positions open, but I think that if you're somebody who is bearish dollar, like I have been, in the last few days, I've really switched my bias around. If this level should hold. So I actually think that there might be some setups that we could take with peak risk to reward in terms of a dollar bearish idea. So there's a couple things I want to kind of take a look at with you guys. First of all, if you guys could do me a quick favor, there's 150 of us here. If you guys could hit that thumbs up button on the stream, it really would help just to get the word out here, get some more people watching the stream. I do appreciate all of you guys for being here with us. So again, the dollar index retesting resistance, I think should hold, but if it doesn't, I need to be out of any ideas or trades that I take. So where do we go with this? Well, let's take a look at some currency pairs. Euro USD, for example, pulling back to what is pretty clearly support. Remember, we called this yesterday. We pointed out if you're a bull, not here, at least my opinion, right? Even if I'm bullish euro dollar, not at these levels, right? You've got to wait for pullbacks. And look what happened. Lo and behold, you can see our markup from yesterday coming right back into play. You've got to pull back down to support. And if you're somebody watching the euro, keep a close eye on this one. I mean, it does look like we could see a bounce if the dollar sees weakness from here. And what might be our catalyst? Well, we don't have a lot of news, but I want to show you something. If we take a look at the smart money tracker in terms of the US dollar, smart money seems to be still long dollar overall, which is a bit concerning in terms of trying to be a dollar bear. But we've also got some pretty strong hands on the euro as well. And if we take a look lower here, this is the latest filing on the COT data. The latest COT data shows us bullishness on the euro. Okay. And if we come down to the dollar, bearishness on the US dollar. Okay, so this gives me a little bit of extra confirmation. I like to take a look at what smart money is doing. This is, of course, institutional money, what they're doing, what they're buying, what they're selling. If you are looking to see what institutional money, these are hedge funds and banks and money managers and essentially the professionals in the industry, what are they doing on a week-to-week basis? By the way, guys, if you're a gold trader, they actually bought gold pretty good. So this dip in gold is especially interesting to me. We've got to talk about gold. And actually what I'll do here, if you guys would like access to this currently, I don't know if you have heard this or not. If you have not heard this already, then this is cool news. Right now, if you message us, you get 45% off the Edge Finder. It is our premium market software tool. If you're serious about your trading and you'd like to level up your analysis with our tools, they are currently 45% off. So what does the Edge Finder do? It allows you to look at what institutional money is up to with our COT tracker, our smart money tracker. By the way, the link is in the chat if you'd like to direct message us for that extra 45. It is 45 if you message us during this stream. So if you're somebody who watches the show and you're like, I'd love to get those tools, here's your chance. Click that link, direct message us. Someone from our team will hook you up with a copy of the tool for that best price of the entire year. That is the best price you're going to get on the Edge Finder. So if you're thinking about it, now's your chance. Anyways, so the other side of this is we also have, of course, the top setups. And this is where things are going to get interesting here today, because my dollar bearish stuff, right? Where is it going to lean me to be bullish? Well, you can see that there's slim pickings today, as actually indicated by our friend here, Grin, in the chat. Slim pickings on the Edge Finder. You're correct, Grin. We are not getting a lot of strong signals right now. Now we are getting some on gold, right? We're getting gold bullish signals, which will be especially interesting to discuss here as we get started. Taking a look at gold, NASDAQ potentially bullish. We'll have to watch that one. So really not a lot of signals, but you guys have to understand something too. Trading is all about quality over quantity. It's not about taking 100 trades, right? If I could find one opportunity in this list that looks good, and that is the one that makes me money this week, that is all that matters, right? So I use this each and every day. I go and I look for setups. So if we now go take a look at gold, although I do like price action in the euro, I'm not getting enough confirmation from the Edge Finder. And who knows, maybe that keeps me out of a trade that doesn't go very well, right? The Edge Finder can be really useful for filtering for better trades. So I want to go take a look at gold while we're discussing this, which, by the way, guys, gold has had a really tough start to the day. For those of you who are watching gold, you've probably seen the 4 hour here. Well, we tried to break underneath it. And to the credit of the bulls, there has been some support held here so far. So yeah, like if you look at this and you say, okay, well, you've got support looking left, and this candle really scooped the lows. It's a nice candle. Is it full-blown bullish from here? Like I said, I like the idea of being bullish gold. So I will look for the reason to do so. But what I don't love is we've lost that, what we talked about all last week, which was this upward trajectory, right? This clear upward trend. Well, we topped out, we lost some of our momentum here, and it seems like price is now breaking support structure. So I'm a little hesitant to just jump into a long. Yes, you've gotten a little bit of a, what you could argue as a potential discount on the price of gold right now, right? With this recent sell-off. But again, it depends what happens with this dollar index. We keep coming back to it because whether you trade the gold market, whether you trade the euro, etc. To be honest with you, I don't hate the idea of a gold trade. I just am a little bit cautious. This candle, the way it closed, is nice. That's a nice wick on the bottom. And then again, support has held so far at this level. This is our 1965 level. And again, you have some catalysts here. If I take a look at the gold scanner, I'm making the decision live as we speak, guys, whether or not gold is a setup for me. So give me a second here. If we take a look at the institutional holdings, gold 73%, US dollar 76%. So institutional money is long gold and they're long dollar. The latest filing, however, was bullish for gold, and we're getting a discount. We're in a range. Would I be comfortable holding it through a range? Possibly. I mean, this is a pullback. It's not technically a bearish trend. Now, I highlighted on our Telegram this morning that we could potentially be breaking into a bearish trend, but we didn't close that candle with, I mean, look at the way candles priced backed, right? Dexter says there's no reason not to buy gold. The only thing that's hesitant for me is that, again, do I want to accept that I may have to sit through a range bound market? But fundamentally, I do like it. COT data gives me that confirmation. So I'm actively considering it as we speak here. I'm doing it on the live today. I think, overall, I have been bullish and I've been wanting an entry. We broke this level. So I think that you may, if you're willing to accept that you may enter a range bound environment, it could be a nice opportunity. So I'm going to keep doing my research here as we speak. COT data, nice light bullish signal. Why light? Why not strong? Well, gold, institutional money went long gold this last week. So I like that. That's a nice factor for me. And to top it off, what's also bullish is that they sold the dollar. Institutional money sold the dollar. So, okay, that's strike two. But where it's a little concerning and where we lose that super bullish call from COT is institutional money is also long US dollar. So that's why we're only getting a +1. I hope that made sense for those of you guys who study the algorithm that is the Edge Finder. That is the thought process. We look at the change week to week and we look at the overall positioning, and then the score automatically calculates bullish or bearish based on that. So we get what is considered a soft bullish reading for COT specifically. Overall, we're getting a soft bullish reading on gold. Okay, so that's how the Edge Finder functions using COT data, but it also looks at all the economic figures. It looks at labor statistics, it looks at interest rates, it looks at inflation, right? Labor market, as I mentioned. So these things are also actively being considered by the Edge Finder. And what we see on that front is we have a nice overall, we can see GDP growth was strong in the US. That's not necessarily great for gold, right? Inflation, however, inflation still relatively high, but cooling. So that's actually kind of oddly bullish for gold because it means that the Fed is going to be less likely to raise rates. Okay. So in some ways, that's actually bullish for gold. You take a look at labor statistics across the board. We had a smash hit victory for gold last week. And I think that truthfully might be the turning point for me with gold, is the fact that we essentially had a turning point in labor statistics last week. So I think I might be getting long on gold here. If I just want to say this is your plug here for the day. If you guys are if you're not in the Discord already, then I highly recommend you guys join us. If you'd like to get access to the trade alerts that Frank and I are sharing, you can get access by clicking the link in the chat. We've got our discounted 45% off sale. So it's the perfect day to join us, especially the rest of this week is going to heat up, guys. We've got JP speaking tomorrow and on Thursday. We're going to be pretty active in there in terms of ideas and stuff that we're doing. So if you would like to see any trade notifications that get sent out, if I take a trade on gold, if I continue to trail stops on S&P 500, if you'd like to get notifications when I enter a trade, here is your chance to do so for the best price of the entire year. We just dropped this link here. Send us a direct message using that link, and you can chat with us there about getting a membership to our community. Again, it's a great week to do it, especially with CPI next week and JP speaking tomorrow and Thursday. We're going to be really busy in there, and we'd love to have you join the community. If you're somebody who's serious about this stuff, this might be the right thing for you. What we do is we share our signals, but with the signals, we share full insights and breakdowns. So like I had a USD CAD trade that I took. I explained like the reasoning behind it, so on and so forth. So if this would be useful to you, message us right now. Like I said, if you do message us while we're live on the stream, we'll get you 45% off of the price to join. So there is your opportunity to do so. All right, so I'm going to go to Frank with this in just a second. I want to ask Frank, I see him in the lobby. In terms of gold, I'm really actively considering whether or not I think gold could be a pickup here. The only concern for me is that, again, we've kind of had this bit of a triple top concept, but pulling back. If you look at the daily chart, though, I don't hate it, right? So I think there could be an argument to say, maybe it continues to pull back down lower. And if that does happen, maybe that's a secondary buy attempt for me. So I'll go to Frank in just a second with this. In fact, let's just go ahead and bring Frank in. We'll do the break before Tom gets on. But hey, Frank, what's going on? We'll bring
Hey,
you
how's
in.
it going?
Hey, so you heard a little bit of what I was saying with gold.
Yeah.
Institutional money went long gold last week. They sold the dollar, and the dollar is up today. So what do you think? Do you think it's an opportunity to kind of get short USD? What do you think?
This is kind of a tricky thing to look at because even on your chart where gold is doing a head and shoulders sort of pattern here,
Hmm.
on something I drew was a wedge pattern that gold broke underneath. So it could be, that price may be trying to come down further and hopefully I hope it makes this decision soon
Hmm.
because what it looks like is it could complete this move down to the 1950s, 1954, 55 range. Or, we see this good 4 hour close right there showing like suggesting maybe it's a turn back to the upside. But right now it looks kind of mixed. The break under the wedge was tough.
Hmm.
Yields are still trying to push higher and why I'm confused, I guess, is because of last week's Fed statement was like pretty dovish sounding, and as a result, we're looking at falling gold, and the indices have been mixed for the past 2 days. So what is happening now, I think, for gold's case, is that it got way too overextended in the initial run to the upside. We saw like an incredible percent gain for the amount of time it took. And maybe, traders are letting off the gas a little bit and just taking profits and letting things play out. So gold, I would say if it can stay either above these lows from the 4 hour of our last 4 hour candle, or if it can complete the move down to 1954 and stay there and show rejection as well, then I think it would be worth looking at longs because you can set your stops pretty low beneath that. But if not, and it breaks further down, I feel like we have quite a ways to go before we see any significant support, which I was looking at like the 1930s range would be the next. So just kind of watching that and seeing where things go. And it's also the same case for, I've been watching Aussie dollar as well.
Hmm. I was
I
going to
have
ask you
this,
about those
yeah, I have this
USD pairs.
bearish bias towards the dollar now, but the dollar and yields are still fighting for more gains to the upside. Whereas we see the RBA released their bank statement last night, and the hike was expected. They went up another 25 basis points, but um, price fell significantly. We just see it like a series of just red candles on the 4 hour
Hmm.
time frame, and it touched these highs around 65 one, and I guess maybe what this looks like is it could be a potential just pullback for another test to the upside. But here I got this support level. If it hits this and bounces up, I'm going to be considering looking to go long here. And if it breaks lower, I'll be looking at the trend line for longs. But I think the plays here for gold and for risk on pairs such as Aussie dollar is to make sure moves get completed. And when you enter a trade, or when I'm entering trades, if I do, I'm going to keep my stop losses tight. So if things really just aren't going the way I think they're going, then I'll take a small loss.
Fair. I think that's well put, Frank. And again, with the dollar index back on the rise here today, there is there's a lot of strength to these green candles that we're seeing on the dollar index. However, I think it's fair to say we still had a pretty solid news week last week. But I think maybe what markets are looking at is, well, you've got CPI next week, and before we can really get too optimistic, we got to see that inflation number is moving in the right way. So thanks for that thought on Australian dollar as well as the US dollar, and of course gold for everybody who is watching that here today. And Frank, I won't keep you. We got Tom coming in behind you, so thanks for coming on the show today.
Sounds good. Thank you.
See ya. All right, guys, we're going to go to Tom here in just a second. We're going to thank our sponsor just before Tom joins on. Of course, sponsors make these shows possible because, of course, these things are not free to run. But with that said, we're going to take a quick break. We'll come right back to Tom after this. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to 8cap, I can trade at any time and anywhere, even in space. And I get a free edge finder with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for 8cap, I promise.
Don't get lost in space. Trade with 8cap. If you'd like more information about how you can get a free edge finder, click the link that's in the chat or description to speak with one of our representatives and sign up with 8cap. There's some great free perks available. Check it out down below.
Frank!
All right, guys, and we are back with Tom from Simply Forex. Hey, Tom, how you doing?
Yeah, good. Thanks, Nick. How are you, mate?
I'm good. It's good to have you back on the show.
Thank
and
you.
Perfect timing, because Frank and I were just going over some of the dollar pairs, and I'd love to get your thoughts on this. Big break to the downside last week following NFP, where we saw jobs numbers come out cooler than expected, which in some ways was what the market needed to see in terms of risk appetite. But now we're seeing the dollar kind of creep back up to these levels. And I pointed this out last week. I said, if you're a dollar bear, even if you're a dollar bear, whether you're bullish or bearish, if you are a dollar bear, it's probably not the best call to get short after, a big move like this. At least that's how I would approach this. Now that we're seeing the pullback, do you think this is an opportunity for the bears who wanted to get involved, or do you think this is a trap and that the dollar index is going back up? I'd love to get your thoughts on any pairs that you're looking at. Probably best to look at things like euro or pound dollar, as I'm sure that's what the audience is looking for. But we'll let you take over for a second here.
Okay, all right. So, yeah, just to, firstly look at that dollar index. And, the market needed something to get it moving, and it was the big news week last week, and as you said, Nick, it broke this range that it found itself in. So and for me, this is retracing to a good area for shorts, is how I'm reading this chart. And where could we take it to? I mean, we could potentially take it down to this grey zone here. If I pull this across slightly, this could potentially be our first target for the dollar index. So, I think that's a break, retest, come lower. How far it will come up here, maybe test the moving average 20. But I'm seeing, dollar weakness. And if we, see this on a few other charts, so euro US dollar is a perfect example. It's clearly broken structure, and it's been trying to do this for a while. Ever since it came down here, structurally, it was just trying to break higher, and the dollar, all the dollar majors were just in this ranging, funky price action, wasn't going anywhere. And again, we finally got this bullish daily candle on Friday. It is, it's hit into a piece of resistance. Okay. So it's worth pointing that out. But I like buys in here as well. Just from a technical analyst point of view, it's retraced enough. It's finding, potentially it will find some support here. If we drop down to the H4 chart now as well, we can see this is a nice level. This is where price was once resistance. And, how many times do we see this pattern? What was once resistance becomes good support. So if we get the right reaction in here, then I think we can potentially take price back up to these highs. This would be my first target. I wouldn't, unless it starts breaking these highs, I would only take it back to this area of resistance.
Sure.
You
Well,
know,
Tom, I want to jump in there too with you on the euro dollar. I made the point just before you mentioned or you came on, you know, the dollar index. If you're a bear on the dollar, then yesterday, you know, we talked about this on stream yesterday and the day before. You know, you can't buy it after the big run up, right? So if you're somebody who wants to be a euro bull, I think it's reasonable, even if you're a dollar bear or dollar bull, doesn't matter. You know, it's probably always best to wait for a retracement, to wait for a place where you get that better risk to reward. Someone in the audience here has pointed out that I said that gold will break 2000, which to clarify, first of all, you know, Tom and I, we've been doing this for a long time. Sometimes we're right, sometimes when we're wrong. When I am wrong, I will always let you guys know. I don't hide or shy away from the times that I'm wrong, but I did not say gold would go into the 2000s. What I pointed out, and please go back and watch my video if you'd like to confirm this, I pointed out that if gold broke into the 2000s, I would take that as a potential pullback signal. So, you know, when it comes to setups and when we're talking game plan here, Tom and I are pointing out ideas. This is not saying, you know, if you think that there could be a breakout, that's not a call out that, oh, gold is going to break out. For me, what it was is conditional. If we get the breakout on gold and we see a pullback, that could be a momentum entry for me. But we didn't get that, and we never really made any sort of significant move back into the 2000s. I was actually looking at this, Tom, in terms of like this 1960 area. Are we going to get support to hold? I would love, and I'm sure a lot of our audience who does trade gold, I'd love to get your thoughts on gold. Is this a support area? I mean, I was really playing around with it for a little bit, but I don't love the way this latest candle is trading. This is a 4-hour candle. We wicked off the lows, but we're kind of staying steady, and I'd love to see how this candle closes. But I'd love to get your thoughts. What do you think about gold right now?
yeah, so we've been discussing this today, funnily enough, gold. So I would like, you know, if we take a bigger picture view, first of all, so if we go to the weekly chart, all right, you know, it's still a buy. Everything is to buy gold, you know, and on the weekly chart, you know, will it retrace down to here? Maybe the moving average 20, maybe it wants to come back and test this channel. You know, that's the $1 million question. And as you mentioned, you know, we'll give levels, but I need things to happen at these levels.
Sure.
You know, for me to have a setup. I just won't trade these levels blindly. So, you know, this is the $1 million question. Where will it retrace to before we get the view on the weekly? But the daily for me has changed a little bit because, you know, I pointed out this level, I think on last week's show, mate, or on, you know, before, and I really like this level here, okay, because you can see price has reacted historically at this level, okay. We've got, you know, we've got the moving average 20 catching up, yeah. So, you know, potentially this could be a really nice level, but what I don't like is the fact that this could potentially be a structure break for me. You know, we're not getting higher highs. That's a bit of a red flag.
Right.
Yeah. And price, if the candle stays like this, breaking this low, that is a bit of a daily break for me. So that would suggest we might come lower. Okay. But, you know, a big but, you know, if the candle today, we saw a huge wick on this candle and it closed back into this low, something like this, even if it was a red candle, but we had a big wick, I would be interested in buying gold. But if it breaks this level and the candle stays as it is now, then I'm not interested. I'll have to wait, you know, maybe a day or two and see what, you know, kind of price action happens in this zone. But you cannot get away for the fact that for me, that would be a daily structure break, lower lows.
Yeah,
So
no,
it's
that's fair, Tom. And that's where I bounced back and forth on the gold idea that I was having was, you know, I'm not decisive enough here at this level. And I was debating earlier in the stream, like, do I want to get long after this wick? But again, I do pay attention to the daily. And I think everybody in this audience, you guys should consider the daily in your analysis. This level, sure, it's a markable zone of potential support. We did have this area hold really nicely, but as you mentioned, a more key, pivotal, and recent area in the market is this 1940 level, right? You've got a huge rejection off this, huge rejection off this. And then when we broke out, that was like the clean sweep for the bull. As soon as we took over that 1940 level, boom, it went right on up to 2000. So for me, if you're a day trader or you're a short-term swing trader like myself, this is possibly, as Frank pointed out when he came on, I mean, I liked Frank's clarity on this, pointed out that we may be kind of getting a little bit of a head and shoulders pattern. And you've confirmed that idea, Tom, as well, with this lower high. You can't, as you mentioned, you can't really deny that we did kind of get that. And especially on the daily chart, which is that really important chart, we're not quite getting the signals. Now, I would agree. So when we talk, and again, people in the audience, you have to understand, when Tom and I are in here and we're sharing our ideas, these are game plans. These are not entries and exits, right? So just because Tom mentioned, like, for example, that if this thing were to wick off of this level, that's a different story. In that case, that's not a call out to say, oh, I think it's going to wick today. It's, if it does happen, then there might be a bullish entry there, because that's a difference in, closing lower than this previous low. Because sometimes you get intraday wicks that kind of close back and you give a nice, actually bullish candle, depending on how that forms. So I think that's really worth mentioning. Tom, I'm gonna let you go for a few minutes and do your thing. I think Chandler sent you over that, so we'll give you the floor for a few minutes to go through some charts, and I'll join you back in just a bit.
Okay, all right. Cheers, Nick.
All right, I'll be back soon.
Okay, see you shortly. So, guys, I mean, we should probably start with a trade that I'm currently in. I am currently in Euro New Zealand dollar short. Why am I in Euro New Zealand dollar short? Well, let me explain the trade. Hopefully, it will make some sense. So, what am I seeing, guys? So, on the day chart, we broke this level here. And as soon as we broke this level, we've been in an uptrend, okay? And then what you can see here, guys, this kind of price action, okay? I actually like this. I call these a box of indecision, all right? This area here is a box of indecision. Basically, what it is a box of consolidation. So you've got buyers and sellers fighting it out in here, like, Ali Foreman. And eventually price has to go somewhere, all right? And as you can see, price with this candle broke to the downside. And that is a structure break from me. So not only have we broken out a box of consolidation, all right, but it's also a structure break, yeah? If this is the last higher low, which it is, we don't make higher highs. If we don't make higher highs, like we wasn't on gold, that is always a red flag, guys. Yeah. And then instead, price breaks down, breaking these lows here. All right. And as soon as that happens, I'm interested in sells. And as you can see, guys, it's just retraced to a really nice level. What was once support, I mentioned this before. And again, this is not a rocket science setup. Yeah, you see this time and time again on the chart. I cannot, iterate this enough. Yeah, what was once support becomes resistance. Yeah, if you only traded this chart setup, you would get some consistency. Yeah, you would do okay. All right. So that's what I'm seeing, and we're seeing a nice bearish reaction as we speak. So that's what I'm seeing on the daily. And guys, I do a top-down approach. So I also look at weekly, daily, H4 and H1, to make an informed decision on my trade. Now, if we go down to the H4, what is this telling us? So daily was telling us that we could short this. All right. Now, the H4 is also telling me to short this. And I'll share exactly how I traded it and why I entered, okay? So we know this last daily low, and also this was a good area, all right? And if you look on the H4, if you look at structure, it's still in a downtrend for me. This was the last high on the H4. This was the low, this was the lower low, but this H4 high here hasn't broken, Okay, so we're still in a downtrend. We were discussing this earlier on. Does this constitute as a higher, a lower high or a higher low? And the answer for me is no, it doesn't. That is not significant enough price action. But this is the last high. And as you can see, guys, we got a nice H4 wicked candle. Okay. But because of this bullish candle as well, I wanted to sell it, but I just needed another piece of confirmation. So once I got this H4 candle here, I'll tell you exactly what I did, guys. I dropped down to the M15 chart. So I sometimes do this, guys. If we're at a key H4 level that I'm interested in selling from, if I drop down to the M15, I'm just waiting for a structure break. Then retest. And this is now the M15, guys. So this was that gray zone that we were interested in. Excuse me. And as you can see, if we just follow M15 structure, again, didn't make a higher high. And then it broke down. As soon as we broke these lows in here, I was all over this. Like a cheap suit. And then prices retraced, back to this level. Okay, and then we've just sort of followed this M15 structure down. And my target is actually, my first target is this 1,800 psychological level. So hopefully my alarm will go off in a minute, and this will be TP1. And at TP1, guys, I'm going to close 80%. Okay, I'm going to close 80% of my trade. Sometimes 70, 60, but I'm going to take some profit. Why am I going to take some profit there? Well, if we go back to, let's go back to the H1 actually. If we go to the H1, guys, we can clearly see this gray zone through here has been an area of support and resistance. Okay, so I'm going to take profit here. If it carries on down, great. I'm still in this trade for 20%. But if it starts coming back up here and eventually takes me out, I will be sick that I didn't take some profit in here. All right. So that's why I take profit. And it's going to be the next support or resistance level. That's all it's going to be. And this is exactly the trade I'm in, guys. And that is exactly how I traded it. And I'm still in this trade currently. And I give you these trade ideas on my channel, guys, Simply Forex. So check it out. Check it out. So that's the Euro New Zealand trade that I'm currently in. What else were we looking at today? So obviously this is a highly correlated trade. I'm also looking at New Zealand dollar, Swiss franc. Okay, actually the Swiss franc pairs in general. Swiss franc, we've just seen a lot of weakness come into the Swiss franc. Okay, so this is potentially going to drive some of my trades today. All right. And if we start with the day chart, you can see, that New Zealand Swiss franc, has been, it was in a crazy downtrend, hit a weekly level. And then ever since we've kind of broke that level, we have been in a super bullish uptrend. Okay. And potentially we can still take this up to this gray zone here, this last low. Okay, so all I'm looking for now, guys, is an opportunity. Okay, we'll take a look at New Zealand US dollar as well. The alarm's just gone off there. So I'm looking at the opportunity to potentially get a retrace, which we've got, and then take price back up to here. If we drop down to the H4 now, again, we've retraced enough. There's some good value in here. Okay, maybe it wants to retrace further. Okay, but the more this retraces, okay, it's all going crazy. Okay, let's just hit target actually, so that's good. So bear with me 1 second, guys. Let me just check my trade. Okay, all right, cool. So as I said, guys, I'm just looking for the same with New Zealand Swiss franc. I'm just looking for a retrace. Will it be here? Will it be here? Nobody knows, guys. So what you need to wait for is the market to tell you, all right? And what I'm looking for, guys, are structure breaks. It's not rocket science, yeah? I'm just waiting for structure to break on a lower time frame, let's say H4 or H1, even M15 sometimes. And that is the catalyst for my trade. Right, everything's going off now. We'll focus on New Zealand Swiss franc. Then we'll look at one of these US dollar pairs because they're at nice levels. And yeah, so H4, guys, obviously we're waiting for a new low. All right, is this it? We don't know. If we drop down to the H1, you know, are we potentially getting a bit of a structure break here? So we was in this sideways action. We've broken down, yeah, and again, sideways action, and then we've had a break. So potentially, you know, this could be a nice area to start buying New Zealand Swiss franc. But I'm in Euro New Zealand, and that, you know, they are highly correlated. Okay, so Euro New Zealand was the better setup. Let's take a look at one of those alarms that have just gone off. So let's look at pound US dollar. Because as we discussed earlier, guys, we looked at Euro US dollar, but I'm also interested in pound US dollar. Yeah, I'm interested in this US dollar weakness because of the break of that dollar index range that we were in. So again, guys, I'm just looking for levels. Yeah, I need a retrace. So once we get this large green candle, I'm not really interested in buying that, yeah? But once it pulls back, either into this grey zone or this grey zone, then I'm interested to potentially take it back up. And again, guys, what am I looking for? So if we look at the H4, yeah, we're starting to see a bullish reaction at the moving average 20 and at this horizontal support level. So there's sort of like a double whammy support here. All right. And again, guys, that's your job as a trader, to find reasons to enter a trade. Yeah. And these are all my reasons. Yeah. So first of all, this was a nice area of support. Okay. And we're at the moving average 20. I use this as dynamic support as well. We're seeing bullish H4 candles appear. If we drop down to the H1 now, we're not really seeing a structure break on the H1, but I look for these little levels, guys. So, I mean, like this, potentially, you know, if we get a break here or even here, yeah, if we get enough, if we get a bullish candle out of there and away from potentially these last highs, then I'm interested. Yeah, I'll start buying pound US dollar back up to here, if not further. Okay. If you want to be, so that's waiting for a H4 or H1 structure break. Yeah. If you want to be more aggressive with your trade, yeah, and maybe you want to be in your trade for less time, then generally that means just reducing your entry time frame. Really, that's what it means. If you're entering on the weekly, you know, you're a swing trader. If you're entering on the 15-minute, you're aggressively getting into a trade, but it could still be at a good H4 level like this is. So if we drop down to the M15 chart now, what am I looking for? I'm just looking for a break of structure. Again, not rocket science, yeah? So price has come down. Funnily enough, these were those two levels I spoke about. And we haven't quite got an M15 structure break yet. Yeah, these last highs haven't broke. But interestingly, and this goes for any time frame, yeah, if you're starting to see higher lows, which we are, this could be an indication that this level here will break. Okay, yeah, because you can imagine we're getting buying pressure into this level now. Yeah, these are buyers are pushing this up. Okay, so if we get a break of this level, maybe a retrace, I'll be interested in pound US dollar as well. So yeah, I'm interested in that. New Zealand also went off. It's going to be a similar setup, guys. It's a US dollar major. So let's take a look at New Zealand US dollar. Okay, so we've had a nice break here on New Zealand US dollar. And this is at a nice level, guys. Yeah. So again, H4 structures in an uptrend. We've got a nice area of support. We're starting to see bullish candles appear. And again, I was just looking for an M15 structure break here, which we've got. So potentially New Zealand US dollar could be a nice trade right now as well.
Tom, that New Zealand dollar, the pound dollar, all of those seem really primed. And I wanted to jump back in here in terms of the US dollar, where we're at. Seeing a little bit of rejection here at that level. At the end of the day, you know, for those of you guys who are just watching Tom go through, you've got the pound, you got the Kiwi, the euro, all these things against the dollar. This is why the dollar index, and Tom broke it down for us earlier. I did a little segment on it as well. The dollar index is so important for this very reason. By looking at this single chart, we can get a pulse on all of those charts that we can kind of dive into more specifically if you want to look at Kiwi dollar or pound dollar. But it's why, you know, we spend so much time on these streams discussing the dollar index. But again, Tom, doing some rejection here, seeing some reaction to this 38.2 and this resistance looking left. So I like those ideas. I mean, I'm kind of with you on the dollar might be turning here, and you might just, of course, you know, somebody could clip this and make me look like an idiot if the dollar index flies, but you might just be getting some really good risk to reward here for that possible sell-off that we could see on the dollar index. So I like your ideas, Tom. I want to thank you for coming on as always and taking over the show here for a few minutes. Everybody who's here with us, if you guys have not already checked out Tom's YouTube channel, he's got his own where he goes through setups, he does streams, he does all sorts of good stuff. So if you'd like more of Tom's technical approach, his link is being dropped in the chat right now for you guys. There it is. Click this link. Make sure to subscribe to Tom on YouTube at Simply Forex. And Tom, thank you very much for coming on the show today.
Cheers, Nick. See you soon, mate. Thanks for having me.
See you later. See ya. Yeah, again, really like the way Tom did that for us, guys. He broke down several, well, he started out with a dollar index, and then he rotated through a couple different select currency pairs that he liked best. So I saw him doing like pound dollar and Kiwi dollar. And I want to ask you guys in the chat, can you guys answer something for me? I'm curious, give me a number. How many charts do you trade? If you're somebody who trades like just euro dollar, or some people trade just pound yen, or they trade just gold, if you guys could let me know in the comment section or in the chat, how many charts do you trade? If you're asking me, I trade about a lot. Well, I don't trade all of them actively. I rotate what I'm trading because I'm a fundamentalist. Inevitably, what is in my focus does tend to change. You know, like the dollar index actually became interesting to me this week, whereas last week it was all about the S&P 500. So I rotate what I'm focused on, but I'm very curious to see what you guys say. So we got 3 to 5, 3 charts, 1. Kay says all charts, 9 to 10, 4, 3 to 4. So if I had to give it a number, I think I'm going to say probably like 10 to 12 is probably what I actively kind of rotate in and out of. Because I trade indices, I trade the major currency pairs, and I mostly stick to like euro dollar, pound dollar, dollar yen, sometimes pound yen, sometimes euro yen, gold, S&P, NASDAQ. I trade the Russell, and sometimes the Dow. So I trade a basket of things, but what focuses for me, they shift over time. I do also want to just shout out, guys. I mentioned this earlier, but if you're somebody who watches the stream on a regular basis and you would like access to the EDGEFINDER, it is currently 45% off if you message us. So right now, there's only like 200 of you guys left. The stream has slowed down a little bit here. For those of you guys who stuck around, we're doing 45% off right now. And if you message us while we're live, someone from my team, you'll be speaking to a real person. When you click this link, it takes you to our live chat support center. And again, you'll be speaking to a real person, either Emily or Hallie. I think they're both in the office. You can meet them, say hello to them, and let them know you're watching the stream. They'll give you that 45% off Black Friday sale if you want access to our trade signals or our coaching webinars or the EDGEFINDER, whatever you'd like. take your pick. Now's your chance to do your Black Friday shopping to get 45% off any of our products, softwares, Discord memberships, etc. So take advantage of that. And now, real quick, we're going to go to James with the news. He's got a little bit something for us to keep us up to date with what's going on. We'll bring him in. Hey, James, how's it going?
Hey, so I actually really quickly before we get into this news segment, I have a question for you, Nick.
Yeah.
About what you were just talking about
Mhm.
the pairs that you trade. I'm curious because I know that you don't trade like every single chart on the market. I mean, that's a lot to keep up with. But I'm curious, do you trade and specifically the currency pairs that you trade?
Mhm.
Do you trade those currency pairs because you find them easier to so I see a lot of US dollar pairs. It's basically Euro USD, Pound USD, USD CAD, USD JPY,
Yeah.
Euro JPY. Do you find that the US dollar pairs are easier to kind of, I don't want to say predict because that's maybe not quite the right word, but they're less volatile in that, with news coming out and being a US resident, you find it easier to kind of navigate those markets? Or is it more so because those certain pairs, that if they, dip too low, they're eventually going to come back to familiar levels. So once you trade them long enough, what the key levels and important levels are, and that something like the US dollar is going to eventually come back
Yeah.
to key levels, so you can find easier entries that way.
So James, that's a phenomenal question. And guys, just a shout out to James. James joined A1 several months ago at this point, but almost a year. Has it been a year, James? Has it been a year? I think
It's been a year and a half. Yeah.
year and a half. That's right. So we had James join us, and he is not a background of finance, economics, and just props to James. He's learned so much. It's so obvious. James and Chandler, both of them have learned a ton about markets to ask such a cool question on the stream. So shout out to you, James. That's probably one of the better questions that anybody could ask, let alone somebody who's not even by profession trading at all. But to answer your question, if I had to pick one chart of everything that I trade, it's the dollar index itself. Now, of course, I'm not placing trades on the dollar index. I'm picking a currency pair. I might be trading gold. I might be trading the S&P 500. But for me, almost everything stems from the US dollar because I'm a fundamentalist in the form of, I pay very close attention to macroeconomics to the best of my ability. That's like opening a can of worms. That's like saying, you understand space if you're an astronomer. Like there's so much to being a fundamentalist, but I find that there's so much stuff out there to possibly take into account and to watch constantly that you do in some ways have to specialize. You have to find your niche. And for me, my niche is the dollar. So I don't trade things. I'm not that I'll never trade them, but I'll rarely, even if I see a setup, like for example, pound Aussie or euro Aussie, it's not that I hate these things and I don't think they possibly could be traded. It's just that anything with a USD in it, I feel like I have a little bit more. Well, I definitely have a lot more understanding fundamentally on what's going to drive that dollar. And especially, the US dollar is like it's the global reserve. So if I'm looking at, the pound against it, the euro against it, I know that the dollar component to that trade is going to be really dominant. It's really important what the Fed has to say. So I feel like by really fixating on the dollar, I can get kind of an understanding of where I want to be, like broadly speaking. And that even extends to like S&P 500, NASDAQ. Those things have a relationship to the dollar because when you talk about the US dollar, in some ways, you're also talking about risk appetite in the world. So like, James, if we're looking at an environment where the global economy is expected to slow down, likely that dollar is going to be running hot. It's going to be going up because all the other currencies, the emerging markets of the world, the higher risk stuff is going to be struggling, and that dollar is going to look relatively attractive. So I build my entire basis around the US dollar. and then I trade what is in focus. So for example, right now, I don't really love the idea of like being super active on gold, because the nice upward trend that we were going through has kind of stalled out. We've lost that momentum. So I stick around to where things are moving well. So I'll start with the dollar. I'll get a bias, and then I'll go find the areas in the market that are moving well, and then I can find the better. At the end of the day, a chart's got to move for you to make money on it. So I'm looking for charts that are already moving and trying to get involved, rather than trying to play something that's kind of stuck in a range. So I know it's a long answer, but that's a really good question, and hopefully I answered that for you and for anybody else who is curious about this. I know you also have some news for us, which again goes back to that concept. We're very fixated on these streams in covering U.S. economic data. Of course, we cover other countries, but the U.S. is really our focus on this show. So what do you have for us, James?
Yeah. So I got some news, and if I could just really quickly, wow, they actually just asked it a second time. Somebody asked me a question in the chat, which I don't think I've ever had happen before.
Oh, you're famous.
Blackhawk Patel says, James, I have a question for you. What is the main thing you see in your charts for trading? Breakout, support and resistance, candlestick pattern. So really quickly, if I had to answer that, I would say, so for me personally, again, like Nick said, I don't have a background in trading or anything whatsoever. In fact, I would say that I only kind of started messing around with it maybe 2-3 months ago. But for me personally, I think that I can kind of spot out levels of support and resistance pretty well when looking at charts. I like to look at the daily chart and the 4-hour chart. And similar to Nick's chart, where you see a lot of these these long horizontal rectangles kind of marking levels of interest, my charts look pretty similar, where I have these big zones where I either am marking price, range bound for long periods of time, or marking what I think to be unique levels of support and resistance. And then I usually look for a clean breakthrough, either support or resistance, because I don't necessarily prefer to go long or short one way or the other. Like I know, Nick, you, for example, you would prefer to go long. I believe that you, in most instances, you don't take as many shorts as you do long trades.
That's very true.
I think. But I that's kind of what I do. I look for support and resistance, and then I look to kind of for a breakout of support or resistance to go long or short. But let's get into the news. So I've got the news pulled up here. So news now, November 7th. I have a few quick things for us. Number one, what's ahead? So this is what we have the rest of the week. These are our most important events. Starting with tomorrow, we have two of the big guys in the market right here. We have Mr. Powell and Mr. Bailey, both holding press conferences tomorrow. So this is Andrew Bailey, the governor of the Bank of England, and this is the Fed Chair Jerome Powell, in charge of the U.S. Federal Reserve. Both of these guys will be speaking tomorrow, and whatever comes out of their mouths is going to move the markets in that direction. These guys have heavy influence over their respective currencies, and what they say matters. So that'll be very interesting to keep up with. Thursday, as usual, we have unemployment claims expected to come out at 210,000, and Jerome Powell is not done. He has even more to say on Thursday, so we will have to keep an eye out on that as well. Friday, UK GDP numbers expected to come out at 0%, as well as preliminary University of Michigan consumer sentiment. That is US dollar news right there. So that is what is still to come Wednesday, Thursday, and Friday of this week. Let's get into what's happening. So right now, we are starting to get into election season. And if you know anything about markets, you know that election season is a big deal. So when I was searching for recent market news, I stumbled upon this. And so really quickly, according to recent polls here in the U.S., Donald Trump's approval rating is currently higher than Joe Biden's in some key states such as Arizona, Georgia, Michigan, Nevada, and Pennsylvania, with Biden leading in Wisconsin. Now, these states are important because they hold a lot of electoral votes and have the potential to be flipped, notably Georgia in 2020. That was actually a really big deal. So if you don't know, A1 Trading is based out of Georgia, which is historically a Republican or red state, but in the 2020 election actually managed to flip to a blue state, which was a big reason Joe Biden actually won the presidency that year. And so election stuff is really starting to ramp up. And why is that important? Well, take a look at this. So this is actually the VIX that I have pulled up here. And I know that it can be a little bit difficult to see, but bear with me for 1 second. So I want to start on this chart on the right here. So right here, you can see 2020. This is the 2020 election season right here. And look at this massive spike in the VIX. And then after election season, it kind of starts to, even out a little bit. It has its highs, it has its lows, but it spikes right here in 2020 around the election. Now, where are some other spikes? If we go over here to this chart on the left, we're looking at years prior. We see 2019, 2018, 2017, 2016 here. Our first spike is just before 2016. That's the 2016 election when Donald Trump became president of the United States, and we can see some more market volatility following. When do we get our next biggest spike? 2018. What is 2018? 2 years after 2016. That's the midterm elections. Those are also big deals, very big market moving stuff. And then our next kind of big spike doesn't happen long after. It's 2019, right around this kind of same range that we're in now. We're getting ready for another big election season. So we could see big volatility spikes in the market. That happens every year around big election stuff. So we are definitely getting ready to see some of that.
James, if you don't mind, just while I can I jump in on the election concept, and we'll come right back to the of course what's happened in the Middle East. I just want to say somebody in the audience said any tips during election time and what kind of statements to look for a question to me. So let me just say this: the play that James is illustrating, a lowering in the VIX and all of those things considered, the play is what I'm currently positioned for at the beginning of this month, which is, where do you go? Historically speaking, you go long indices. Now, I'm not saying go long today, and I'm not telling anybody to do something on their account. This is what I've pointed out, a really, really important phenomenon. It doesn't matter what your stance on politics is. At the end of the day, if you were the president right now, you would say, okay, the stock market has had a really tough time, and that's going to reflect horribly in the polls. So there's this phenomenon where the current administration will do their best to relieve pressure in the stock market, because that's going to be huge for the American vote. Because at the end of the day, if you're sitting there and the stock market under your guidance has had a horrible 4 years, that's going to look terrible. Currently, that's kind of the environment. For the last 2 or 3 years, if you've been somebody who's diligently invested and put your money away in the stock market, it's gone sideways. You haven't had any gains. You haven't seen any, in an environment where inflation is hurting all of us. You would think the people who are diligent enough to invest would have some returns. They haven't seen that. So my point with that is, I think, and this has been my thesis, is that you're going into the end of the year, which is historically a good time for indices. You're also going into, notably, as James has well put, showcased here, you're going into an environment where it's the end of an election. We're going into a new election. You combine those two things together, you combine the breakout pattern that we found, this has the potential to be a runner. And this is why I'm trailing my stop on the S&P. I'm not trying to just take profits here, because I think, again, the market will find the reason to potentially continue as we approach election season. It's a really important phenomenon that James pointed out. And again, we alerted people to that idea inside of our Discord channel. I know it's a shameless plug, but genuinely, if you want the notifications from Frank and I when we take trades, if you want our research and in-depth reports, and you're serious about this stuff, come join us. It's our Black Friday sale. Take advantage. It's 45% off if you message us right now. Take advantage of all the ideas that we're sharing. It's not always like this, and I don't want to kind of come across as like, oh, these are always our trades, but one good trade like this can account for the several bad trades that I've had recently. So I'm not saying I did this perfectly by any means, but overall, we caught something. I think that we might have potential here to squeeze higher. That's why I'm still trailing the stop. James, you're about to go into what's happening in the Middle East. Sorry to cut you off there. I just wanted to reiterate how powerful that point you made actually was about pre-election fourth quarter season.
Well, I owe that to you, Nick, because you taught me that. So,
there we go.
Let's see. So
at least I'm teaching someone something. That's a win for me.
If you need any sort of not to turn this into the Nick is so great and the smartest person ever show, but if you need any more validation for Nick spreading his his knowledge and his education, if you think I know anything about markets, it's because I just hang around Nick. So
thanks, James. I'll slide you a $20 bill later for that. So I appreciate that.
But anyway, back to the news. So I don't have too much to say about what's going on over in the Middle East, other than this is officially 1 full month since the conflict has really ramped up, and this is gold. So we've talked about this before. I know that you and Tom have already discussed your thoughts on gold, but still, I think that it's interesting just in case somebody has not seen this or does not know about this. So 1 full month since the conflict in Israel and Palestine really kicked off. And this right here is the very beginning of that conflict, exactly 1 month ago. And you can see how the price of gold has risen since then. It has given some of that back, but gold and oil are directly related to things going on in the Middle East. And so with this conflict, we can expect that gold will continue to be highly, highly volatile. So moving right along, slow start for the S&P this week. This is something that Frank actually pointed out to me yesterday, and so far it looks like that we have seen kind of the same. The S&P 500 the last 2 days, I don't know if I have seen a market like this. So if you're looking at this chart right here, it looks pretty normal until you see these tiny, tiny 2 little candles right there. We're looking at a daily chart right here. And look at what the S&P 500 did yesterday. I mean, it practically did nothing. And I know that the trading day just started today, but pretty much no moves today. And in fact, I took it to the 15-minute chart, and this is the past 2 days right here. So you can see this is where the market opened on Monday. And we did have a little bit of a dip here, but pretty much immediately gave back that dip, and it's just been tiny movements for the S&P 500 the last 2 days. And Nick, I had another question for you. Can you explain maybe why the S&P has just been absolutely, because consolidation is one thing, but a lot of times what you see in consolidation is you'll see a move to the upside and move to the downside. This is like no movement at all, which is something that I feel like I haven't seen a whole lot of in the market. So is there a reason behind this?
Yeah. So I think, the big tell is that, on our end, on the show creation side, Chandler and James and I, we coordinate these shows. And as part of our kind of to-do, we constantly are paying attention to what's happening in the news, right? Like our goal here, if you guys are watching us on YouTube and you support us, this is your chance to subscribe and hit that thumbs up button. What we do is we look ahead and we try and coordinate shows to give you guys the best coverage we possibly can, bring on guests who are knowledgeable about topics. And if you look at this week, first of all, last week was a bombshell of just a bomb of news, right? We had so much stuff go on. We had NFP, we had, PMIs, we had Jerome Powell speaking. And so far this week, we've had not a lot of movement because the news has been quiet, but also you kind of have to think about in retrospect, you have a VIX selling off, right? The VIX volatility index, this will show, as James was pointing out, this shows volatility in the markets. This is showing how much things are going to move. Well, it tanked after we got kind of that relief push last week. We saw a lot of risk sentiment really kind of come back into the market. People thinking, okay, things might be a little steadier from here. And you tie that in with the S&P 500, which had really great gains last week. Yes, this is still, now we're getting a little bit of movement, but still, to your point, very small relative to last week's volatility. I think one thing to be said, and you could take this as bearish, you could take those as slowdown candles that maybe this momentum starts to give back. But I think you could also make the point that, we're making those gains and we're not giving them back, right? As you pointed out in that intraday candle, James, on the S&P, if you're watching this and you say, well, yeah, we had a little bit of a drop, but price recovered immediately. It kind of shows appetite for supporting all of those gains that we made last week. What would be probably a bigger concern would be, as Marco, when he comes on the show, he always points out these ideas like big V movements. Those usually indicate like, wow, that move was not sustainable, and participants completely gave it up. I mean, to your point, we saw this big push up sideways, bulls supported price immediately, and now we're seeing a little bit of volatility. But where I expect, if you trade gold, dollar, S&P, whatever you guys trade, you can always come back to this show. We will always be reporting for the big events, and for those big events, I think things start to kick up tomorrow morning with Jerome Powell speaking again. He's got a press conference there in the morning, and then he's got another one on Thursday in the afternoon. And as a service to the trading community, we will be here putting on a show for you guys to kind of bring you coverage. And that's of course what we're here for. That's why A1 trading is a thing. So James, did you have anything else, or was that were you wrapping
I do
up?
have one last thing.
Okay.
End it on kind of a little bit of a different note, something kind of goofy that I saw that I wanted to share with the people.
Okay.
So I searched for USD in the news, and the very first thing that popped up for whatever reason was this. Dior debuts $230 US Bon Étoile scented water for babies. This is baby perfume. Dior has baby perfume, and so my last question was, Nick, would you ever buy $230 perfume for your baby?
230. Do people just have so
Scented
much
water.
excess money to buy that sort of junk? It's literally scented water for $230.
Scented water for babies for $230.
James, you're going to trigger me. That is infuriating.
I saw that and I thought it
$230?
was too ridiculous not to share.
Well, that's just showing, if that's not a sign to be careful with Dior stock. I actually don't even know what their stock is, if they're publicly traded.
I saw that it was down when I was
Oh,
searching
really?
for this. Dior stock. The shareholders did not like scented water for babies, apparently.
For babies? The baby's not even going to appreciate scented water.
No.
I mean, they just poop their pants anyways. Like, just get them baby wipes.
Yeah, I searched US dollar, and for whatever reason, that was the very first thing that popped up, and I was like, "That's ridiculous." Let's end the show on a goofy note. So that's it for the news today.
James, thanks for that. And again, great questions as always. And I guess we'll let you go. We'll see you back in the next stream.
Oh, and I will also say really quickly, if you guys have been keeping up with the A1 Trading channel, you know that we just finished up our trading competition, and that video where we announced the winner is going to come out tomorrow. So tomorrow, the winner will. Did you see those balloons?
Whoa, how did that happen?
I don't know. I swear that happened another time when I did a thumbs up. It automatically did a thumbs up thing. I don't know what
didn't do that.
I don't know how I triggered that. But I somehow triggered that, and I've done it before. But anyway, the video is going to come out tomorrow. It's a really, really cool video because we have Nick and Frank going one by one through each person's trading account. So you not only, normally you get to see Nick and Frank talk about their own trading. Now you get to see Nick and Frank kind of critique and also compliment members of the A1 trading communities trading throughout the month of October. So it's a really cool video. I know that you guys are really going to enjoy it, and that's coming out tomorrow. So I wanted to give a quick shout out to that.
Sweet. Well, thanks, James. Again, I look forward to seeing that video. Should be kind of fun. Well, we'll see you on the next show, James.
Yep. Thank you.
All right. See ya. All right, guys. And just a final update on this S&P. I know James pointed out we've had a quiet start to the week, but starting to come alive here. I am still, as you guys know, I'm still in the trade and just about to crest a $10,000 trade here. Currently, we'll see if that, of course, gains. There it is. Just hit the 10,000 mark for a second there. But goal here for the trade, as I've mentioned, is I think we have potential to squeeze past this level of resistance. The question will be, can we meaningfully break through this level? We do have CPI next week. We have, in terms of this week, we have Jerome Powell speaking. Market participants are probably going to be looking, I know myself included, we're going to be looking to see if Jerome Powell kind of keeps his less hawkish tone that he gave us last week. And perhaps with the NFP jobs numbers, does he speak favorably about those numbers? That's where I think people are going to really pay close attention to as we go into the end of this week. So yes, should be a very action-packed second half of the week. And as I mentioned, if you guys are not in our Discord, come join us. If you're serious about this stuff, if you want to get on the coaching webinars, if you'd like to work with Frank, myself, and Ivan, that is something that you can do so by joining the VIP group. You also get trading signals from us. So when we take trades, you can see those trades and get the full breakdowns. So when we take a trade, this is what it looks like. So this trade that I took on the S&P 500, this was the initial technical breakout that we looked for. We caught that trade. We spoke highly about seasonality and why November is historically a positive month. We took the trade, we shared the updates. And again, we are running on this one trade, which is just made up for several of the losses before. At the end of the day, it's all about, winning more than you're losing. And it doesn't mean you're going to be exempt from losses. I've had a losing streak before this, but this one trade has really brought us back from any sort of losing streak and made much more even than what was lost. So definitely join us if you have not already. It's going to be an action-packed second half of the week, and you can currently get it 45% off if you direct message us here. So shoot us a DM. Someone from our team will get you hooked up with a membership. And just as we close on that, I do want to say, if you're somebody who's been thinking about it, this is our best price of the year. We do not go lower than this. So 45% off is the best you can get. So if you're somebody who wants access to the Edge Finder, or you'd like access to the Discord trade alerts from Frank, myself, and our coaching webinars with Ivan, click that link, join us, shoot us a message. You'll be speaking to a real person who can set you up with a membership. With that said, guys, have a wonderful rest of your day. Thank you very much for watching today's show, and we'll see you back tomorrow.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.